We are starting off with a look at the latest developments in the banking sector. Yes Bank is making headlines with its plans to acquire a portfolio of loans from a foreign bank for around 2,500 crore rupees, although we don't have any confirmation on this just yet. Meanwhile, Kotak Mahindra Bank has completed the acquisition of NZVC's 9.15% stake in Kotak Mahindra Pension Fund, which could potentially strengthen its position in the pension fund market. In other news, Diamond Power Infrastructure is seeing a significant surge in its stock price after receiving a massive order worth rupees 435 crore for Hyderabad data center projects. This order is being hailed as one of the largest single cable supply orders in India's data center segment, and reinforces the company's position as a preferred supplier of power cables for mission-critical digital infrastructure. We're also keeping an eye on the shares of Yes Bank, which have been rising steadily over the past few trading sessions. The bank has been working to strengthen its balance sheet and improve its asset quality, and it will be interesting to see how these efforts play out in the coming months. Over at Diamond Power Infrastructure, the company's management is confident about its ability to execute on this large order and deliver high-quality products to its clients. With the data center sector continuing to grow rapidly in India, this could be a significant opportunity for the company to expand its business and increase its revenue. As we continue to monitor these developments, it's essential to remember that the stock market can be unpredictable, and investors should always do their own research and consider multiple perspectives before making any investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of technology and finance, where Indian IT firms are facing a challenging quarter. According to recent reports, these companies are expected to post subdued growth due to AI-driven pricing pressure, weak client spending, and global geopolitical turmoil. The April to June quarter is usually a strong period for India's $315 billion 1T sector, but this time around, analysts predict a slow start to the fiscal year. Top 1 Mest T services companies like Tata Consultancy Services, Infosys, HCL Tech, and Wipro are expected to report around 14% year-on-year revenue growth in rupee terms, with net profit rising 12 to 13%. However, when you strip out exchange rate effects, the picture isn't as rosy, with a mere 2.8% revenue growth in constant currency terms. The IT sector is navigating a significant shift towards AI tools and agents, which is changing the game for these companies. They are adapting to new customer needs, but it's not without its challenges. The rise of AI is leading to pricing pressure, and companies are slowing down their hiring processes. In fact, TCS Chairman N. Chandrasekaran recently stated that the day is not far when the company would have an equal number of AI agents and employees. The situation is being described as a perfect storm by some analysts, with Middle East conflict-led uncertainty compounding AI-driven pricing pressure. The Nifty IT index has taken a hit, slumping about 28% so far in 2026, making it the worst-performing major sector in India. As we look ahead to the earnings reports from these top IT firms, annual revenue forecasts will be a key focus for investors. Some brokerages predict that companies like Infosys and HCL Tech might narrow or trim the upper end of their forecasts. With potentially higher interest rates in the US on the horizon, which makes up about 60% of Indian 1T firms' revenue, there are certainly concerns about what's to come. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. For now, it's clear that Indian IT firms are facing significant challenges in this evolving landscape. Welcome back to the Riskwiser Zone. We've got a great closing segment for you today as we dive into the latest developments in the stock market. There's been a lot of talk about the bull market and whether it will continue into the second half of 2026. Some Wall Street strategists are predicting further gains, citing falling oil and gasoline prices, resilience in the Nasdaq Composite and S&P 500, and the ongoing AI boom. Baird investment strategist Ross Mayfield recently told Yahoo Finance that he thinks there's more to be excited about than to be nervous about, pointing to earnings and liquidity as key drivers of the bull market. He believes this could keep the market going into the second half of the year and potentially even into 2027. However, not everyone is convinced. Some analysts are warning against piling into high-flying tech stocks that have seen sharp gains in recent months. They are advising investors to diversify their portfolios and look for opportunities in other areas, such as industrials, healthcare, and materials. It's also worth noting that the Federal Reserve's latest moves will be closely watched, with the release of minutes from their first meeting with Kevin Warsh at the helm due out soon. This could provide some insight into the Fed's thinking on interest rates and inflation. Ultimately, as with any investment decision, it's essential to do your own research and consider multiple perspectives before making a move. The stock market can be unpredictable, and it's crucial to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.